Hi, this is Alessio. Hope you're well, and welcome to another update on the financial markets. Now, I don't know if you noticed this, but this article was on the front cover of Barron's Journal or magazine. Now, let me just show you this. This was published just a few days ago, and it is absolutely shocking what they're saying in this particular article. And by the way, in case you're not familiar with Barron's, they're a financial journal, a bit like the Wall Street Journal. Look what they wrote on their front cover just a few days ago. This bull market has no expiration date. Wow. I mean, that is unbelievable what they just wrote there. When you see an article like that, I mean, alarm bells should start ringing in your head right there. And by the way, let me just show you, that's not the only one. Here's Market Watch. Market Watch writes, can an unsustainable stock and bond rally extend the soaring quarter for sleep easy portfolios? Unbelievable. So guys, here's the bottom line. Whenever you see articles like this being written on the front cover of major financial journals, there is only one proper response to things like this, which is,
our survey said.
Actually, you know what? That is too polite. That's too polite. The correct response actually should be this. Thank you, Kevin James. Now, here's the thing, guys. The bottom line is, and I've mentioned this before, that what seems to be happening is that greed has taken control of the markets. And unfortunately, even some of the most intelligent minds out there have become completely blind to the facts. First of all, look at the fear and greed index, which has once again got into extreme greed territory. We've gone into the greed territory, in fact, surpassing the previous greed index. So it is without a doubt that most people in the markets are completely losing sight of the warning signals. There is something else also. Let me read you this. This is in Barron's magazine, the same article that writes that there's no expiration date on the bull market. Let's read this and just have a bit of a laugh. So here's what Michael Scholl, CEO of Market Field Asset Management, writes. As far as the U.S. economy is concerned, there is no obvious sign that it has deteriorated. Okay, so what's the reason? Here's the reason he gives for this. Well, apparently, in the most recent jobs report, the U.S. added 196,000 jobs. Okay, so we added more jobs in March. That's the reason he is citing. And here's something else. He says that hardly any economic indicators show that there will be a recession. Wow. It is shocking that so many people some people who should know better, I mean, these are Ivy League educated people, are completely ignoring the facts. I mean, just in my most recent video, you probably saw, I showed that the yield curve has become inverted, and history shows whenever the yield curve becomes inverted, becomes negative, it means we're only about 18 months or probably 12 to 18 months away from a major recession. And yet you have articles in financial journals writing garbage like this. There's nothing to be worried about, bro. You know, that's what they said in 2007. Nothing to worry about, bro, because economic indicators are all good. And by the way, guys, let me just show you this. This guy says that 196,000 jobs were added in March, so therefore nothing to worry about, right? So let me just show you some interesting facts. This is the calendar month of October 2007. As you can see, October 5th, 2007. Let's look at the jobs report. In case you're wondering why October 5th, 2007, why am I showing you this? Well, guess what? First of all, 2007 was the year the stock market peaked, right? And October 2007 was more or less when the stock market peaked that year, all right, before we started a major drop. Now, I'm not showing you this because I think that the market's going to peak right now. That's not the reason I'm showing you this, but because look at the economic report back in October 2007, okay, the same year the stock market peaked. Now, you would think, right, that the economy was really bad and the jobs report would be really bad, right? No, it wasn't. Look at it. Again, October 5th, 2007, jobs report. What does it say? For the jobs report that month, that year, it says 110,000 jobs were added. More than they expected. Okay, so more than the forecast. And in fact, the jobs report shows that the unemployment rate was very low unemployment rate back in October 2007. In fact, let me just show you this. Let's go forward a bit. As you'll see from this chart, the year 2007 had the lowest unemployment of that period, of that decade, before the unemployment rate, in fact, skyrocketed higher. Why? Because, of course, then we entered a major recession, as you can see from here. There you go. The stock market, of course, then peaked and then dropped, as you can see from, and of course, you know the rest of the story. But again, just go back to that chart a few moments ago. So again, in 2007, the economy was booming. We had the lowest unemployment figures in that decade. And again, notice that right now, actually just about a few months ago in 2018, the unemployment numbers were as low, in fact, even lower than they were back in 2007. And yet, as we know, back in 2007, what were they saying? What were they saying about the economy in 2007? The exact same thing. Unemployment numbers are low. The fundamentals are really good. Let me show you this. This is the article. It's an article from December 5th, 2007. As you can see, December 5th, 2007 from Reuters. And look what it said. Bush says economic fundamentals are good. Let me read you the article here, so just over here. U.S. President George W. Bush said on Tuesday, the country's economic fundamentals were strong, despite the headwinds. So guys, that is what I've been saying to you before. Whenever politicians or indeed anybody in the mainstream media keeps telling you the fundamentals are strong, so nothing to worry about, that is absolutely meaningless. That is like driving, but only driving by looking at the rear view mirror. I don't know about you, but I think you'll agree with me that if you're only looking at that specific mirror to see what's happened behind you, before you, then you're going to have an accident pretty soon. And that is exactly what most politicians and people in mainstream media do when they keep telling you, oh, nothing to worry about because the unemployment numbers are really low and the economy is really good, because guess what? That is exactly what they said in 2007, 12 years ago, right before a major economic crash. Bottom line is this, guys. When you see articles like this being published in the mainstream media, the bull market has no expiration date, or indeed hardly any economic indicator shows there will be a recession. First of all, the proper response is thank you. And the real meaning behind these articles and the way we should interpret them is that we should be very cautious, very alert. This is a contrarian signal, all right? It means we should be very, very cautious, because what it could mean essentially is that the market, the stock market, is about to reach a major turning point. Now, I don't think we're there yet. As I mentioned before, certainly the fact that greed is getting more extreme is something we should certainly be cautious about. The bottom line is that I think once the market reaches some critical price levels and some time resistance levels, all right, so price resistance and time resistance levels, then potentially we could hit a major turning point in the major market, in the stock market. And then we're going to see this market unravel and eventually fall much further lower. But I don't think we're there yet. And by the way, guys, in the member video, I've actually mentioned the price levels and the time levels we need to be aware of where the market could potentially start a major turning point. And that's in the member video, plus updates on the currencies and Bitcoin in that video as well. All right, guys, thanks very much indeed. I hope this video helps. And if it has, please give it a thumbs up, and also please subscribe for future video updates. Thanks a lot. Bye for now.